Now, with the emergence of artificial intelligence and the competition of not only other banks but other services that you get, customers and that includes typically entrepreneurs and that includes also your own bankers are behaving differently. And so if you are not adapted to that trend, you will automatically go back.
Tim, thank you so much for spending time with us today. Just before we start, for those who have not had the pleasure of meeting you, please tell me who you are and what you do.
Sure. I'm heading the go-to-market for nCino on the continental Europe.
Okay, now we just had a really insightful breakfast seminar here for the whole morning where we get to discuss some of the pressing issues that banks and financial institutions face when they're trying to modernize their credit risk models and also the lending function in business banking. We discussed the fact that neobanks are coming in and they're much faster in their time to market and deployment. So how can banks compete with the speed to market that we see from new entrants into their space?
We get this question a lot, actually, asking us, how are your neobanks customers? What are they doing that we could reuse? It's difficult because they're starting with two different incentives. Neobanks have to go and grab market shares very quickly, while traditional banks are opposing to that speed and aggressivity. They're opposing the fact that they're safe and that they have a lot of breadth in their offering. The moment they start losing market share, that's when they get interested in, hey, how can we compete with that? What are the best practices or new practices that neobanks are bringing to the market that we could leverage? And they're starting with three levels of hindrance, I would say. The first one is obviously they have a lot of technical debt that they need to figure out and slowly modernize. The second is from a policy perspective, they're not necessarily as adventurous or adapted to some of and to counter the offers that those neobanks would have. And then the third one is old habits, die hard. And still in the case of, let's say, SME, which is one of the main areas where neobanks are being successful, they're still serving those SMEs like they are serving their low default portfolio with a lot of paperwork and assessment, long assessment times or long response times. How they can compete with that, I think, is taking a step back and saying, what is the results we actually want to achieve? If we are going to reduce typically time to yes, time to cash, they need to have a holistic approach on reviewing that and not just modernizing systems, because that's only the top of the iceberg, I would say.
Right. Okay. Now, in your experience, how important is the role that data plays in reshaping the way that banks can make decisions when it comes to credit risk management?
I mean, it's the foundation, right? Even for neobanks, it's how they differentiate from traditional bank is how they make use of the data. So the data is the fundament. The good news is in credit risk, there is a very good data culture and data or data practices, right? All the decisions are made on historical data, of which the bank have a lot. The main issues is how do they get access to that data? For many reasons, that data is residing in silos. It's not used. It's used only for one purpose when it can be used across multi-purposes. So it would be used to calculate the risk when it could actually be used to, sizing a wallet or providing new products. So it's more that how do we free up that data across multiple use cases? And then again, it requires a holistic approach and not just seeing one use case at a time. So the silver lining is there is data culture, data is there. There's been data collection. It's been used for auditing purposes and regulatory reporting. Now, how do we use it also for competitive advantage? It's also redefining policies and allowing for fast decisions. So there's an automation aspect to it, which is I have the data, I need to make it work for me, and I need to apply all the different risk policies, risk appetite, um, application to products and so on top. But then there's also allowing for more of those automated use cases. Right now, as I said, it's still viewed that some counterparties will be served as a traditional bank as opposed to be seen as more of the automation process we see in the retail banking side, for example.
You use the phrase historical data, and the historical data is there. What do banks need to do to be able to move towards real-time data usage for credit decision making?
The usage of transaction data is typically a good example of real-time data that can profile companies more accurately than more static data that those companies have to file once a year and that are reflecting last year's financial situation. And so it's using that more cash flow based approach or transaction based approach, and creating a modern risk profile on top of that data that is going to be a differentiator. Now, decision making on credit is still old mathematics, right? But I think it would be interesting to see how much of a difference there is between products that are approved with transaction data versus product that would have been let's say refused on the back of static data.
Right. And now we know that the SME market has been traditionally underserved by large financial institutions. How can banks use automation and technology to start addressing the needs of that untapped part of the market?
Yeah, so there are a number of examples, including in Denmark here, where most of that process is digital first, and you are either allowing to replicate some of the offerings you're providing on the retail market to SMEs, and so having more access to self-serve products, or you are spending, or the banks are spending more time directly with the customer and automating everything that has not to do with customer-facing activity. So all the back office and internal checks and disbursements and whatnot. This is also where systems play a big role, because thinking that they will be able to compete with systems that are very static on a market that is ever evolving and asking for personalization, that is doomed for failure. So I think in the case of automation, and to put the data available and to provide the answer in real time, you will need technology upgrade.
Right. Okay. And now we also realize that a lot of banks have a lot of technology, but they don't. Their processes and their mindset and their ability to use the technology to its full potential doesn't really evolve with the same speed as sometimes the technological needs evolve. How do you see banks addressing this gap in mindset that allows them to make the most use out of technology?
There's some context to that as well. Large banks are conservative. They are profitable. So their incentive to actually change only starts when they start feeling either loss of income or increasing costs. There's also a lot of regulatory pressure that typically could block inertia that this bank would have in transforming. Now, with the emergence of artificial intelligence and the competition of not only other banks but other services that you get, without entering too much in cliches, but you have your Netflix and you have your Spotify and customers and that includes typically entrepreneurs and that includes also your own bankers are behaving differently. And so if you are not adapted to that trend, you will automatically go back. Technologies have also been deployed historically with siloed decision making without a holistic view. Each department or function within the bank was buying fit-for-purpose technology for their own need. But I think, again, a view for a holistic approach and looking at an end result. I want to approve a loan faster. I want to disperse the money faster. Needs to have also a change in processes. It's very frequent that we go into banks where the systems are the process and not the process, and not supporting a process, but they are the process. And so having the if there's a real incentive to transform, to keep market share, to reduce cost income, reduce the cost income ratio, or to modernize the way the bankers are interacting with your own systems, and ensure that you can attract the best talents. If that's one of the incentives to change, then it requires to look at the end result and not just one small use case.
Right, indeed. What role do you think AI plays in helping banks capitalize on efficiencies in the processing of credit risk decisioning?
Yeah. So currently there is still no real adventurous banks that are going to ask for forgiveness rather than permission to go and take or let AI take decisions. But they are going to, and there are also active use cases right now to look into the entry of the decision process and the output of the decision process to use AI for that. So on the entry of the process, it's can we agglomerate a larger set of data or data sources that are identifying my customers, allowing me to choose the customer, allowing to foresee fraud and so on at the entrance of the process. So interpret that data and make sense of that data into a readable or understandable format. And then there will be AI at the output of it. Typically, there are still some credit memos running around that will be generated by Gen AI. It can be offer letters, it can be term sheets, and so on. There, they will use AI to produce those output. But the part in the middle, that is still there are some use cases that are being investigated, but that is still early stage on the banking market, typically because this is the part that is very contentious, that needs to be explained and explainable, that needs to be audited. And right now we are relying on formulas that are working, they have not shown limitations. But that part, even if it is manual or it follows a number of statistical models with processes, it can be sped up and it can be automated. It doesn't need to be AI automated.
All right. Well, Tim, just thank you very much for sharing all those insights with us. It's great having someone with your expertise in the market and is able to help organizations navigate these difficult decisions of whether they should build or buy products and services that enable them to take part in this part of the market. So,
thanks for having me.
Thank you very much.